Hi, welcome to 2024 Investing Playbook Market Forecast. My name is Sankar Sharma. While there is no guarantee of anything in life, having a plan helps you to achieve your investing goals, your money goals in 2024. Normally, I never share this with the outside world. I used to share this only with my high end clients and my students. So this time I thought I'll help out the entire world. So I'm posting this, and hopefully you will like it, and hopefully you will have some plan rather than not having one. This is not a buy and sell recommendation. This is just based on my 34 plus years of experience, a forecast of what could manifest in this year, 2024. So happy New Year to all of you. May this year be a blessed year. May this year be a prosperous one for you. So let's get started. All forms of investing and trading involves risk. You are responsible for your decisions. And this is not a buy or sell recommendation. I'm giving you enough information to make informed choices with your investments. And some of these things may not happen tomorrow. This is not like a trading type setup where you take this based on information today, tomorrow it makes millions of dollars. Nothing like that. This is planned for the entire year. Some of them may happen, some of them may not happen, some of them may happen soon, some of them may happen faster, some of them might move more than others. So it all depends as the year progresses. But this is just a forecast and a plan so that you can make informed decisions and you'll be in a better place rather than not having a plan. Disclaimer required by the law. So welcome back to 2024 Investing Playbook. As I said, this is a market forecast. In this particular session, I'm taking US market, but most of the global markets generally follow US markets. So most of things I'm sharing here will also be eligible for you to, it's also be useful for you to use in other markets. A quick intro about me. If you're thinking, who am I and why you should listen to me? My name is Sankar Sharma. I've been investing in trading for nearly 34 plus years. I have seen multiple recessions. This year could be a recessionary year. We don't know. There's a 61% chance of a recession according to bond market and the yield curve. I'm founder of riskrewardreturn.com, and I also founder of a 3R strategy and investing methodology that I developed for my students to use, and it's been working very well. I give financial skills, money skills, investing skills, trading skills. I help traders and investors make their money work for them in the markets. My coaching students had major transformations over the years. Some of them turned just in the last 2 years, 10K into $250,000. And results can be independently verified. I've been featured in many of top media outlets, including Forbes, FT Specialist, US News, International Business Times, IG Markets, NBC, ABC, Bloomberg, USA Today, CBS, the list goes on. But today is not about me, it is all about you. So let's get started. So let's jump in and talk about objectives for today. And 2024 playbook, I want to talk about big risks, big surprises, big themes, big contrarian plays, big market opportunities, oil and bond market forecast, global market outlook. And in the global market outlook, I'm going to talk about best countries to invest in 2024 and also key sectors you should keep an eye on. So let's start with this question. Where are we now? 2023 had been a tough year for many people as the cost of living crisis was all over the place. High inflation, high interest rates kept emptying people's wallet. From there, we are now transitioning into 2024, where high interest rates are still on hold. The US economy, the good news is the US economy is still strong and consumers still spending. US dollar reached peak in 2023, but it's still strong, still trending upwards. Investors are worrying about recession. Currently, there is a 61% chance of recession in the second half, not in first half. We talk about it a little bit later in greater detail. Investors who have never invested in recessionary period had to pay extra attention to that session when we talk about it. New jobs are slowing, but US unemployment still very low. The world is set up for a slowdown, according to IMF and all other economists. China gets negative downgrade from Moody's. Japan is considering rate hikes at some point in the next couple of years. Fed is continuing with the quantitative tightening. That means money that is circulating will continue to reduce. US government debt burden has hit $34 trillion at the time of this recording and is still moving higher. US commercial real estate is not doing great. So let's jump in and talk about macro risks. What are the big macro risks in 2024? As you all know, there is still geopolitical tensions, escalations in the Middle East. 2024 is election year, not just in America, but around 40 countries around the world. AI is taking off. Artificial intelligence has been taking off in the World Economic Forum. They were saying that AI is going to take over many jobs, especially in advanced countries. AI currently is ungoverned and unregulated, so that will be a topic of discussion for quite a few years to come. As recession worries, debt defaults are on the rise. Student loan defaults and credit card defaults, auto loan defaults are increasing. Interest rates are high and staying there for now. Climate change is affecting globally. Many people are affected in many different ways, starting from volcanic activities in Iceland to floods in various places, unexpected severe snow in other places. China probably will be coming out of its economic troubles in the next couple of years. Currently, it's been downgraded by Moody's. There are supply chain issues, on the other hand, due to what's happening in Red Sea. What is going to be a big surprise for 2024? So these are a few points I'm considering that could be a bit of a surprises in the 2024. One could be earnings growth could be 6 to 7%. People are expecting 6 rate cuts. And fortunately, there are not going to be 6 rate cuts. There probably may be 3 rate cuts, which I'll talk about in greater detail. And most people are expecting Fed to cut in March. In our research, it shows Fed is not going to cut rates that soon. If anything, it's going to be in June or beyond that, but not in March. In our studies, British pound is showing that it could actually go lower at some point this year, maybe in the second half, but it's likely to go a lot lower than where it is. Bitcoin is likely to move higher. The best case scenario at the moment is everybody's expecting soft landing. Soft landing means you just avoid recession. But the best way to consider recession is expect soft landing, but be prepared for hard landing as well, meaning expect for a little bit more severe recession as well when you plan like that. And if that doesn't materialize, you're in good place. Inflation could be sticky because most people think inflation will come down very quickly. And that is not generally the case. Inflation, in my experience, I've seen it staying there for quite a bit of time. The first piece of inflation comes down quickly, but to go from where we are now to Fed's target rate of 2%, it's going to be a little tricky. It's like weight loss. You can lose certain amount very quickly. And then the last piece is always hard to get rid of the last amount of weight. So that's similar to the market as well. US market is going to outperform the UK market. Certain countries will see severe recessions. So let's jump in and talk about British pound. As you see from my analysis, a British pound likely to go lower. If you've seen in the past, May 01, it made low. May 09, it made low. 17 Jan made low. Now, quite likely more in November, it might make new low. We don't know. We just got to wait and see. It's been in the downtrend. Big movers for 2024, what we planned based on our forecast, it looks like alternate energy, nuclear energy is going to outperform because of shortage of uranium. Uranium is in short supply. Many old mines are closing. There is also short supply of sulfuric acid, which is used in the extraction of uranium. So one should expect at some point the nuclear energy stocks to outperform. In other words, uranium stocks ETFs could do well at some point. The copper, gold, silver, and precious metals are likely to do well, and also they might continue their upturn to next year as well. Generally, gold is considered as the best one to have in your portfolio as a hedge to protect from uncertainties of the economy, uncertainties of the market. If there are wars, gold is always a good one to have in your portfolio. And alternatively, if you're worried about recession, gold could also act as a cushion. And if you're thinking of US dollar going down, then gold could keep the value. It's got store value, so it can keep the value of it. So that'll be a good tug of war between gold and Bitcoin, as we have seen in the past. Selective small caps should do very well. When you're selecting small caps, make sure they don't have excess debt and make sure that they have enough capital to see through a couple of years at least. And generally, small caps which have got good cash flow and good positive earnings and making profits will do very well. REITs are likely to outperform when interest rates are cut, then generally REITs do very well as well. Wheat, corn, rice prices are likely to move based on our studies. Now, industrials and precious metals forecast for 2024. If you see, this is a monthly chart of copper. We've got a price pattern. So if you want to learn about price patterns, I'll probably leave a link below this video so you can learn about price patterns. Price patterns tells us exact targets where it's going to go. So in this case, if you notice, copper is likely to go 1296. And one thing to remember with commodities are very risky. So don't expect them to jump up and go tomorrow to the higher levels. They take time. And they move very fast. And gold is got what's called a cup and handle pattern in subject called technical analysis, if you're aware of it. And based on that, it looks like gold could go a lot higher from where we are. So it's worth considering gold for your portfolio. Do not put more than 10% of your portfolio in gold. Normally, that is just a recommended limit. Silver, on the other hand, is also going to go higher, but don't expect silver to move very quick. Normally, silver follows gold, and silver is like a 10-year hold if you're buying here. Best price to pay for silver is around 15, 16. So just think about it, and you can buy gold, silver, different forms, physical gold, physical silver coins, and a whole lot of different ways you can get involved. But the easiest and less costly route of investing gold or silver is either having a gold ETF, exchange traded fund, or a silver exchange traded fund in your portfolio, or a gold miner. So things like that. Outlook for soft commodities. This is very important. As some of you might know, rice, wheat, corn are all soft commodities. The prices of these are likely to go higher, primarily because Russia-Ukraine war, and also because last year the fertilizers demand was very low. That implies the crop may not be usual level. The supply might get impacted. Also, climate change could impact. So overall, expect rice, wheat, and the corn to go slightly higher. So that is one threat for the market because that could actually spike the food inflation. But when Federal Reserve looks at it, they look at excluding food and energy, the inflation excluding food and energy. So it won't play directly it won't affect their planning, but it's worth noting that this could go up at some point. So that's the chart of rice. Is a monthly chart, which implies there is a little bit of headroom for it, and it can go a little bit higher from where it is currently. Wheat similarly has been settling down, and currently it's in the oversold area, so quite likely to go up. When this starts going up, you may want to look at consumer staples. You may want to look at wheat stocks, corn stocks, etc. When that happens, at the moment, it's just giving an indication that wheat has been oversold. What are the big themes for 2024? Number one position goes to cybersecurity. Everyone should have some amount of cybersecurity stocks in their portfolio or a ETF, because as we're going into elections and also as we've been noticing majority of 2023 and at least part of 2024, there's going to be a lot of cybersecurity issues. So, first place goes to cybersecurity, and second place is obesity drug makers. As you noticed last year, Eli Lilly had a fabulous run in the obesity drug theme, and it's quite likely there could be some more players showing up, and the market could be competitive. Uh, AI chip producers will also be in demand, along with NVIDIA and AMD. AMD has come up with the advanced macro devices, has come up with a slightly better uh, artificial intelligence chip than NVIDIA, but both of them still could be moving higher. And there are other chip producers, which I'll cover in another video. It will be too much for this video, but they could still go higher. AI applications of AI is here to stay, and many companies are spending a lot of money on AI. So artificial intelligence is here to stay. Sickle cell gene editing, and that could see much better growth. Next one is eVTOL. These are electric vehicles that take off vertically. So they're called vertical takeoff and landing vehicles, electrical vertical takeoff and landing vehicles. They're going to have a bright future because they not only cut down the pollution, they also help you beat the traffic. So they're all affordable at the moment. Many eVTOLs are currently under trials. Some of them already working and profitable. Bitcoin ETFs, the 11 been approved. Some of them been trading very actively. Bitcoin ETF could also now see a position in people's portfolio in this year and coming years. Private credit market could be a little bit of red area where we might see some troubles. Augmented virtual reality for retail, industrial gaming, retail gaming and industrial purposes could also be area worth watching. And AI assisted robotics, embedded robotics, when they come in, they could be creating job losses or something to look out for. It may take a little bit of time for them to come completely into the market, but there are areas where they've already been launched. So, what are the big contrarian plays for 2024? These two are my favorites, lithium and natural gas. Primarily, these two had seen a really bad 2023, and they could see a move up in 2024. If the EV demand continues, there could be lithium demand, but if EV demand, electric vehicles demand, falls off in 2024, then lithium you can ignore. Natural gas, currently, most countries have got a good amount of reserve gas, natural gas. But as we get closer to 2024 and the beginning of 2025, many countries will be depleting natural gas, increasing the demand for natural gas. So as you can see, it's very close to all-time low. So that is why it is a contrarian play. Big opportunities. Where are the big opportunities? Let's talk about UK and Europe economies. If you see this particular chart, it tells you that FTSE is also on a continual uptrend. Recently, it's been quite volatile and not made any big moves to that side or this side. The areas in this last railway line is oversold. That means there's got a room for it to go back up. If it is here or above these two lines, that means it has been overvalued and the market will normally come down. Overall, what it puts is saying is still on a good uptrend, and this is the monthly chart. That means in the coming 2-3 years, FTSE should go a lot higher, and short period it'll be very volatile. So our outlook on FTSE is neutral. Both the UK and Eurozone are flirting with a risk of recession. Earning trends are very weaker, and for those reasons, FTSE we see as a neutral candidate, whereas DAX and Hang Seng are likely to go higher. Outlook for the US indices. If you see, this is a chart of S&P, and every time we went above into the highest track, we can see market started selling off. And similarly, if you go on anywhere closer to here, as you saw in 2020, and that means the markets are ready to bounce back. So at the moment, we are heading towards the highest track. So in the second half, we might see if there is a recession or pullback in the market. is likely to happen in the second half because we still got room to run. So 2024 for indices is going to be quite positive in our opinion. Even though there could be a recession, we are likely to see a 10 to 15% gain. That implies that we should see higher performance from the markets this year. Typically on president re-election year, markets generally tend to go higher. So you have got that as well, that statistic to add to your equation. If there is a soft landing, you should still expect a 5 to 6% pullback. The US is going to outperform the UK market as we discussed earlier. Small caps are also going to outperform 2024. Be selective. If you're doing anything, be selective. Pick profitable companies with low debt and good cash flow that will act like a cushion for you in your portfolio. S&P, Nasdaq, and small caps should continue to move up even if there is a recession. But if recession is avoided, they're going to go even higher. So our base case scenario for S&P for 2024 is to hit a target of between 5,000 and 5,200. If there is no recession, then we expect the S&P to go even higher, at least to 5,500 if there's no recession. If there's a mild recession, then we expect S&P to come back and test the lower levels of 4,100 to 3,800. If we have a soft landing, we should expect a 5% pullback. A recession, if it shows up in US, it's going to be a short-lived 6 months recession, in our opinion. Dow targets are 36,800 to 39,000 in our opinion. If there's no recession, we should be able to meet that comfortably. Oil. Outlook for oil and energy. Oil will be very volatile in 2024. Potential for further cuts from OPEC Plus. Oil to fall if there's a recession. Otherwise, oil is going to be range bound, just like this chart is showing us. This is a weekly chart. And if oil breaks above 94.50, then we can see oil going up to 120 to 125 range. But otherwise, we should expect it to be range bound between 63 to 95. But if it goes above that, then oil could go straight up to 125. As it stands, it's unlikely it's range bound for now. Bond markets, as you can see, the 20-year Treasury TLT has been steady downtrend. This is like a good, nice tradable market. It has been very tradable market. If you are into that, you can make use of it. High yield bonds, on the other hand, been going on sideways. So they're just coiling up to go up or down in one way or other. Key sectors to watch in 2024, consumer discretionary, communications, financials, tech, transportation, capital goods, and materials. So this might take a rotation, but these are the key sectors we'll be focusing on in 2024. So as we finish recession, we might just want to consider other things like tech, transportation, and discretionary. But these are the sectors you want to stay focused, and any moves upwards in these sectors are worth considering to invest. Global markets outlook for 2024, India, Mexico, Japan are, in our opinion, going to do well. So here is a chart of Mexico. You can see it's been steadily going up. So in our opinion, Mexico is looking good. India is looking good as well. And Japan is looking good. So quick summary. We discussed about big risks 2024, big surprises of 2024, big themes to look out for. Don't forget cybersecurity. Don't forget investing in some amount of money in gold in your portfolio. And we talked about big contrarian plays. We talked about big market opportunities. We talked about oil and bond forecasts. We talked about global markets outlook. We talked about key sector plays for 2024. So quick recap, expect copper, gold, silver, and precious metals to do well. Interest rate cuts likely in second half of the year. And any market sell-off will present the best buying opportunities. A recession or soft landing, it could likely happen in the second half. And there's a potential for British pound to make new lows. India, Japan, Mexico are the markets to look to invest around the globe. And S&P could reach 5,200. That's our best case scenario. Thank you so much for the privilege of your time. And if you enjoyed this session, like, subscribe, follow, comment, and look forward to providing you more and more useful information which could help you in your active decision making as life progresses. I look forward to serving you. If you want to make your money work for you, then I'm the person you want to know. Thank you very much. Sankar Sharma signing off. Bye for now.